The new auto loan interest deduction that starts in 2025, not nearly as straightforward as it needs to be. And I fear that people that are eligible for the deduction are actually not going to get it in 2025, and it could create a big mess. I want you to get the maximum deduction and avoid that tax stress. I've got the gotchas connected to the new auto loan deduction. That and more coming up. Several requirements make the new auto loan interest deduction anything from automatic, especially for your 2025 tax year. And I know that people that are eligible for the deduction, that should be able to get a deduction on their taxes because of this, aren't gonna do it. They won't think to put it on their return. It's not going to be accurate, and so they're going to pay more tax than they actually should. But I also think the opposite is sadly true as well. That people that maybe with a good heart, thinking I should be able to qualify for this deduction, will put it on their return, actually not qualify, and get that bad news, a notice from the IRS saying, yeah, you didn't get this deduction. You now owe us more taxes. There's just a lot of gotchas, a lot of details in this new auto loan tax deduction. Let me get into it so you can avoid the gotchas and you can make sure that you're getting the most deduction possible and filing an accurate tax return. First, not every auto loan and not every vehicle qualifies for this new deduction. That's right. Number one, it's got to be a new car, not new to you. It's got to be a new vehicle, final assembly in the U.S. Second, actually, in the law, it says it's only for vehicles with at least two wheels. That's seriously what they put in the law. Well, what does that mean? That means new motorcycles count as well as new cars, but ATVs don't count, trailers don't count, campers don't count, and as I already said, used vehicles don't count as well. To help filter all this out on the actual tax document, the tax form that you fill out, you've got to include the VIN number of the vehicle so that they can double check and confirm that, yeah, this vehicle qualifies final assembly in the U.S. and that the weight is correct. That's right. Vehicles must be under 14,000 pounds in order to be eligible for this new deduction. And then finally, the deduction is only for new loans, meaning loans originated after 12/31 of 2024. I think a lot of people logically will look and say, well, I've got a new car loan. I can finally deduct the interest. That's fantastic. Only to realize, or maybe when it's too late and they get the notice from the IRS that, oh yeah, well, that's the new car loan was originally a year and a half ago, in late 2024, but not after this threshold of 12/31/24. And yeah, you're not eligible. So not every vehicle qualifies and not every auto loan qualifies. Those are a long list of gotchas right there. Second, and this is a huge gotcha, a lot of people will not be eligible for the full deduction or any deduction at all because their income is going to be too high. Very common. New tax laws come with, well, you only get this deduction if your income's below this threshold, these income phase outs, this common practice. And yet the unique thing with this new auto loan, again, it's auto loans for new vehicles. To me, this is just my perception, these income phase outs are strangely low. No value judgments, right? Vehicles are expensive. Used vehicles and new vehicles, they are expensive. And so therefore, I guess I assume that the income threshold would be a little bit bigger to confirm that, well, you're buying a new vehicle. Let's not give you a tax incentive for doing something that might really strain your financial life. But to me, I think these income phase outs are a little low. Single filers, in order to be eligible for this, your income needs to be below 100,000. Otherwise, you start losing some of the deduction. Over 150,000, you don't get any of the deduction. And married, filing jointly, 200,000, your income needs to be below 200,000, and then you lose the deduction completely at 250. Now, you may disagree. You might say, oh no, that's going to catch a lot of people. And it might. But again, I think new vehicle, and I want you to do it responsibly. And so if you're getting a car loan and it's new vehicle, I guess I was just expecting that the income threshold would be a little bit bigger so that more people could financially responsibly get a new vehicle and still qualify for the deduction. And then the final gotcha, and guys, this one is the biggie, right? All of those details are important, but this is the reason why I think a lot of people are either going to be eligible for the deduction, but actually not get it, so pay more tax than they should, or think they're getting the deduction, put it on the return only to get that nasty gram from the IRS, the notice saying, no, you don't get this deduction and now you owe us some taxes, even though you already filed your return. And that is 2025 is a transitionary year, meaning you are not getting a tax form that shows the auto loan interest that's eligible for you to deduct. You're not getting one. So your mortgage interest, right? Your 1098, your mortgage interest, you get a tax document for that, and it shows the mortgage interest you get to put on your tax return. You would think they're going to do this for new auto loans, and they will, starting next year, starting in 2026. Not right now. Right now, 2025. It's a wild, wild west. It's on you. It's up to you to determine, are you eligible? How much interest do you get to deduct, and so on. And therefore, I think a lot of people are just going to be on autopilot, not be aware that they get this deduction, not get a tax form, and totally miss out. And others thinking, yeah, I qualify. And not be aware of some of these rules that you now know and put the deduction on the return only to find out that you're not eligible, right? And so 2025 is a transitionary year, wild, wild west. A lot of people are going to make a mistake. Remember, this deduction for new auto loan interest is only on up to 10 grand of interest, and it's only temporary. For the 2025 tax year, 2026, 27, and 28 tax years, it's going to be out in the future where they determine, do we extend this or does it expire at that time? I want you to get the most tax deduction possible and be planning through that and optimizing with it. And I also want you to file an accurate tax return at the very beginning. So first time, not then get a notice and say, oh, yep, I guess I messed that up. I want you to avoid that strife, that headache, and that frustration. So work with your certified financial planner on this. I hope this helps you capture the details, know that you are eligible, know why you're not eligible. I want you to optimize and get an accurate tax return. Work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with KWiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.